Hi all and welcome to TCM Education. In this video we will continue and discuss winning trades. This is our focus as day traders. We need to find the best intraday setups and those setups that turn 1% risk or any defined quantitative or quantified risk into a profit. Now obviously not all trades are the same, not all trades are going to be winning trades. If a trade is a losing trade, then it needs to be taken into account before entering the trade. So we have a couple of prerequisites. Having said that, we'll see some examples from yesterday's price action, and we have on our watch list only 13 stocks that meet the criteria, which is I guess a kind of harsh, but that's a good thing, because we don't have 1,000 stocks on our watch list. Not even 50. You cannot get along with 50. I mean, obviously we can prioritize, but if the list is manageable, and this is definitely a manageable risk, normally I would like to see more, but obviously it's now after hours, nothing is live, we have the time for that, and let's dive in. Start with the number one stock that moved up triple digit yesterday. That's NKTR, Nectar Therapeutics. The stock moved up a lot at the open already because of they announced a successful study, and the result is that the stock let me point exactly where it started and where it went from. So it started to trade basically at it started with more than 100% gap up. So it closed at 9:30 on Monday and started to trade at 19 yesterday. Then it had a huge sell-off bar where I guess investors took profits, and since basically 9:45 it started to move higher and ended up at one point at 27. So those who sold at 20, I don't know if they made a mistake. One very important observation about this stock. Normally, when we see a stock that's gapping up so much, and if you look at the daily chart, you'll see a reverse split a couple of days ago. I don't have the time to get into it right now. Just look at the daily chart. You think that there are no institutional traders involved here, but that's what I was thinking, getting used to these pump and dump type of movements. No, 70% of shares are owned by institutions, so that's actually encouraging, and I hope that we will be able to trade, or some of you will be able to trade and profit from the movement in this biotech stock. Although again, biotech stocks probably the most volatile in the market, other than the Bitcoin stocks. So okay, but that's an observation that maybe it's not necessarily true in this case. So where is an entry point? Obviously, trading live triple digit, it ended up 156% up. Trading a triple digit stock mover is like riding a wild horse, and again, where are the entry points if you can find one? What is the risk? Obviously, I have to say that up front you want to look for a round number. So if the stock opened over 20, you would look for a breakout over 20. Despite the huge pullback, so it pulled back from 20 to 16. So that's how much is it percentage wise? $4. That's 20%. That's a 20% move in 10 or 15 minutes. That's the type of price action you're looking into here. So percentage wise or dollar wise, it doesn't matter. The volatility is tremendous. Now, where can you enter this trade? And I would look only at round numbers. So the first idea that comes to mind is the breakout later when it's going to break over 20. So that's a potential entry here when it breaks over 20 after 10:30. Now, what is the risk on this entry? Let's pinpoint the entry and see if it's manageable. I mean, you need to do the same live. You're not going to enter the trade without a stop loss, being that the price action is super volatile, and you can end up with a huge loser, which is obviously not in our business plan. So that's 20. Hold on a second. That's the long entry, and the stock spikes up in 2 minutes or 3. In this case, the bar is 3 minutes, so in 3 minutes to 21.50, and 6 minutes or 8 minutes, 9 minutes later, it's down to 18. So again, tremendous volatility. If you enter the trade at 20 and you don't protect and look, obviously you're looking for more. Okay, this move is a 2-minute move. You want to be in this trade maybe until the close. It wasn't meant to be on this on this example, but let me bring in the trend line. So that's hold on a second. That's the 20 entry. Okay, so if you enter the trade at 20 and you're super fast and this is your strategy to take profits immediately, maybe you can squeeze $1 out of this trade. But what is the risk before you entering? What is the risk before you enter the trade? And I'm looking at the chart, and I have to say, I don't see where is the stop loss. I mean, you can randomly pick 19 or 18 or 17 or whatever. Obviously, it's a super risky trade. I have to say that anybody that's taking this trade takes a lot of risk. A reasonable risk here will be 50 cents. I don't know how big the spreads were when the stock moved over 20. I would have to say 10, 15 cents, but I don't know. I wasn't watching it live, and the stock moved up $1.50, immediately turned around. So if your strategy is to take profits immediately, maybe it's a successful trade. If your strategy is to stay in the trade and get on board with a 5% winner, tough luck, you're not getting it, and you're lucky to exit back at the entry if you elevate the stop loss to the entry from wherever the stop loss would have been. And looking at the chart, I don't know where the stop loss could have been. So that's an option. Now, if we look very carefully at another option, let's take a look at this. Let me bring in again the trend line. 18 entry. In this case, again, and this entry is very, very tough to observe at 18, way earlier. Then you have kind of a triangle price action. You can see it here. Hold on a second. Trying to, learn something from this nasty chart. Again, when we're trading triple-digit stocks, the charts is a wild horse. The rewards are immense, but the risks are also on board with that. So that's an 18 entry. Now, can you observe it? I have to say you have to be a jet fighter pilot in order to observe it. If you observe it, you're probably getting paid, because the risk on this trade is $1.50. And if you're taking this risk, you may be in the trade until the end. Okay, so if that's the strategy. And now, if the strategy is to scalp it, it's probably a losing trade. Probably, again, the spikes are and up and down are so fast, it's highly manageable. Okay, now let's take a look, and again, this is in retrospect. I'm not trying to interpret this chart live, because it's way harder to do it live while we are doing it now in front of a dead chart. Now let's take a look at another option. Okay, and this is this support level using a smart option that's available to us as day trader, is to observe support levels. Now in this case, let me draw it at 22. The charting package here is not the best, but we'll do our best. So this is the 22 support level. Give or take a couple of cents in the stock. So the stock is up, down, obviously, other than the first sell-off bars in the morning session. The trended up is up, but there are at times aggressive pullbacks, and an aggressive pullback here means 10%, sometimes more than 10%. Okay, so a normal trade is not on the table where you risk 1% per trade. That's not happening with NKTR up triple digit, and we've seen it plenty of times with triple digit movers. So not going to repeat that. Those stocks are not tradable under the same criteria as the normal stocks that are up 5% or 7 or even 10. This is a different type of trade. So if you observe this 22 support level and you see the stock basically hovering for a long period of time at 22.50, you can enter the trade at or anywhere between 22.40, maybe 22.50, and use 22 as stop loss. In this case, that's a 50-cent risk. Let's round things up. That's 2% of risk. And in this case, it's a successful trade where the stock moves the $5 from 22 to 27. So on a 50-cent risk, you're getting a 10-to-1 risk reward. That's probably the best setup in terms of risk reward all day. Okay, so I'm not necessarily saying that you're going to take 10% out of this move. But if you can take 6% and you risk 2%, that's already 3-to-1. And if you can take 7 or 8%, it's even better. So what you can do is elevate the stop loss in the money. Obviously, at one point into the close, we're going to stop out. I'm guessing that this level at 25, anywhere above 25, and you start the trade at 22, that's a $3 winner versus 50-cent risk. That's 1 to 6, sorry, it's 1 to 6. It can easily be considered a very nice winner. Okay guys, that's all I have to say about NKTR. Again, should be on your watch list for the coming days. The daily, I have a couple of seconds to analyze it. This is the daily of NKTR, and you can see the split here, which means the stock was basically under $1 for a long period of time. Then the Nasdaq rules are saying that it can be under $1, but it will be delisted if it stays there for a long period of time. Then they did a reverse split of 15-to-1, and then the news came in. It's always the same, and now some of the investors, which are very important part of this equation, meaning institutional investors like BlackRock, are in this business. So that's a surprise, but institutional investors are holding 70% of shares, and that's actually a very healthy thing. Okay guys, thanks for being here. Please share this video with your friends, and we'll see you in our next video.